The market snaps 7-day winning streak as it ends in the red. The sensex slips to 79,800 level. Nifty settles near 24,200. The pharma index climbs while real estate and FMCG stocks decline in trade.
Hindustan Unilever posts a tepid quarter but expects first half of FY26 to be better than H2 of FY25. Although gross margins could crimp on higher investments, Tata Consumer sees double-digit growth as a given and a better margin profile if tea prices ease. Nestle also flags improving volume growth.
Divi's laboratory surges on the back of positive commentary from Citi. Analysts believe the addition of oral GLP-1 drug is set to pose a big opportunity for the drug maker. Hello and welcome to Markets Forward, your go-to program where we aim to get you everything you need to know as you gear up for the next trading session. I'm Prashant, with me, my colleague Surabhi. Surabhi, hi.
Hi Prashant, a quiet day, a day of pause perhaps, but not too bad considering perhaps the market has rallied so much.
You know, these pause days give you time to think, reflect, right?
Much
Otherwise
needed.
you're just chasing headlines, chasing prices, and things have moved very, very fast. That's the reality. 13% on the Nifty in the last 7 odd trading sessions now. So it's coming really heavy and fast. So today was, as we said, a bit of a pause. Nothing much, about 1/3% lower on the Nifty. The Nifty banged down a little bit more, but the Bank Nifty ended lower yesterday as well. And things were getting a little stretched. Actually, they are a little overbought. We've been highlighting that for since yesterday. And yesterday, the market did not pay any attention. It moved right back on. Today, this morning, of course, as we came in, there was some at the margin chatter, worry, whatever you want to call it, about, of course, the potential escalation or in terms of the terror attacks that happened in Kashmir and how that would go forward. And, of course, on the global front as well, maybe, it's kind of swinging from extreme to saying that, well, everything is finished, to going to the other extreme to say that, well, we are absolutely back to, again, getting into a bit of a mood of despondency, that this is going to take time, nothing is going to get resolved very soon. So you were kind of swinging between those phases. That one-time reset, correction, pullback has happened, and now I think you're basically just waiting for something to move as far as these trade deals, etc., are concerned. Lots happened as far as single stocks are concerned. We'll talk about that. Surabhi.
Absolutely. And indeed, I mean, today, global markets as well, while we were trading, many of them chose the red color. Europe was down about 0.5%. US futures had turned negative by the time we closed out. They were down 0.5% to almost 1%. So a sense of caution perhaps prevailing in international markets as well. And for our market here today, if you talk about a lot of the sectors, there was no leadership at all. Yesterday, at least, IT was picking up the mantle. Today, IT was down, banks were down, almost everything except pharma and healthcare was actually on the lower side. And we'll talk about that as we go forward. And even mid-caps, very quiet session. Mid-cap index ending absolutely flat. And the advanced decline was totally even Steven. So a bit of a nothing sort of a day. Let's now talk about the lineup. Here's what we have for you on the show today. We'll start off with the key movers and shakers. We'll have Hormaz joining in with all the action on the stock-specific front. Some individual stocks on our radar include Tata Consumer, Divi's and Ola Electric, and we'll tell you why in just a bit. And then, of course, finally, we dive into a lot of the key events to watch, which will also include some pretty big earnings. So lots coming up. Let's get started then. Straight away go across to Hormaz with a key stock-specific account of the day.
It's almost been 2 weeks and it now finally feels like earnings season is finally picking up pace. It's evident from the earnings reactions that we had today. Syngene being the accident of the day, almost 13% lower. Canfin Homes too not having a good day today, 5% lower after its results. But the casualty bigger one on the Nifty was HUL. It was an initial pop that gave way to a steep sell-off from the highs after the management expressed some worries over margins. Dalmia Bharat and Tata Consumer too seeing some earnings reactions in today's session. Pharma as a sector did well. Mid-cap pharma in particular, look at Natco ending 7% higher. Divi's, of course, with that positive brokerage commentary, they're ending 5% higher. Here comes Ajanta Pharma, Wockhardt too, seeing healthy gains today. Among the newsmakers today, of course, was Whirlpool. The parent company reported results and that had a rub-off on the India unit, 9% higher here. Niva Bupa carrying on from where it left off yesterday after Motilal Oswal's initiation. Vari got a couple of downgrades today and ended 5.5% lower. Of course, some profit booking after a 2-day surge. Blue Star and Devyani International too seeing some news flow today. And stocks that are at a 52-week high in today's session. BSE, of course, continues to grow from strength to strength. GSK Pharma, JK Cement, SBI Cards too forming the list. And lastly, the stocks that did well on the volumes front. Mid-cap IT, a couple of names there. Newgen Software and Sonata Software. Look at these moves. 10.5%, 9% on strong volumes. Triveni Engineering and Thermax too among the volume movers today.
Okay. All right. Got that, Hormaz. Thanks very much. Well, let's move in and welcome our guests on the show. We have Ambareesh Baliga and Ruchit Jain of Motilal Oswal joining in for some perspective. Ruchit, let me first come to you because this is a bit of a pause day after this heady upward momentum and move. What do you make of the market right now? Key levels on the Nifty, Bank Nifty, and what's your advice?
Yeah, very good afternoon to everyone. The overall trend still seems to be positive because there are no signs of a change in the trend, but only because we have seen a significant run up in a very short period of time. I think just 7 to 8 trading sessions and the markets have run up without any meaningful correction. Due to that, the momentum readings on the lower time frame charts are now in the overbought zone. So I think for next 3 or 4 trading sessions, either we should see some slight dip towards the 23,800 to 23,900 range, or some time-wise correction where the index would trade within a range like we saw in today's trading session. So I think before resuming the uptrend, we expect some 3 or 4 days of consolidation to play out. In this consolidation, I think there would be more of a sector or sectorial or stock-specific momentum could be seen. So on the index front, to relieve these overbought setups, we could see some consolidation. So traders should look for more of a buy on dip approach now rather than chasing the index at current levels. But yes, certain sectors, if you see, such as cement space is there, pharma is there, fresh momentum has been witnessed in these names which have not yet participated in last 10, 12 days of up move. So this is the take that we are recommending to take now more of a sector or a stock specific approach within which cement and pharma are looking good.
Okay, got that. Let's quickly focus on a bunch of specific stocks and areas in the market, and one such segment is, of course, FMCG. Now, a lot of the stocks were under pressure after reporting numbers. HUL, Nestle all came out with their Q4 performance, and the market was not too happy, largely speaking. Manglam is here with a snapshot on the earnings. Manglam.
Well, if you look at HUL, the results were largely in line with very muted expectations of 2% revenue growth, 2% EBITDA growth itself. There were a couple of bright spots and a couple of near-term concerns as well. For HUL itself, the bright spot was that volume growth came in at 2% versus expectations of 0 to 1%, even though revenue, EBITDA and net profit were all in line with expectations. The near-term concern and the reason why the stock was lower is because the company said that they will shave off gross margins to improve the value proposition to pump prime growth ahead, and as a result of which the EBITDA margin guidance for the next few quarters from 23 to 24% stands at around 22 to 23% itself. The big bright spot, however, is that they see growth returning in a lot of the categories. In fact, the first half of the next financial year, they expect growth to be better than the second half of FY25 itself. So those are a couple of factors that stood out for HUL. The stock lower, but one would have to look at growth in the next 1 year to see whether the brokerages will up their estimates despite them reducing their margin guidance as well or not. For Nestle, the top line was fairly muted, though operationally the company did report some sort of resilience. There was, that 2 to 3% top line growth that came in largely in line with expectations. Volume growth came in at 2% as well. But the gross margin compression at 62 basis points was a lot lower than what the street was factoring in, despite the sort of inflation that we saw in both cocoa as well as coffee. And the company did say they saw double-digit growth in their confectionery as well as beverages portfolio, along with the pet care portfolio as well. Finally, we had Tata Consumer, which saw a sharp recovery from the lows and ended marginally in the green on the back of largely in line set of numbers, but growth is returning in their portfolio when it comes to Narishco, Sampann as well as Soulful, which is the growth portfolio of the company, where the management did guide for double-digit revenue growth in FY26 on an overall basis with 80 to 100 basis points margin improvement and 30% growth for their growth portfolio, which is Narishco, Sampann and Soulful.
Double-digit revenue growth is a given. We've already come to volume growth across all our businesses this quarter. We have every single business growing on revenue as well, 17% top line, 12% organic. EBITDA margins were a bit soft. And if you look at it, overall EBITDA, I was a negative 1.1. But here's the thing. The primary compression has been because of tea prices, which have run up 25 to 30%. If I took off both the cost and price increases that we took on tea this quarter, I have improved my full year by 80 bips. Our guidance is for improvement of 50 to 100 bips every year on EBITDA margins, and that doesn't change.
There's a pretty strong case for us to further develop investments going forward. Coming to pricing, there are two different group of commodities. When I look at crude oil and related commodities, which impacts by and large home care, we are seeing deflationary scenario there. In fact, crude oil back to back for the last 2 years has been deflationary. But we see a group of commodities like palm oil and tea where we have seen inflation. And hence, there are reasons where certain categories will see price increase, certain categories we will have some price decrease. On a net basis, we expect low single-digit price range going forward. So margins, what we had explained that we are now investing behind more, given both the right time to invest because of internal dialing up of the portfolio and because of external improving conditions. Because of that increased investment, we will go to a little lower EBITDA range of 22 to 23%. This guidance is for next few quarters for us. Now, of course, few quarters later, we'll determine into what guidance we end up operating at, looking into market conditions. As Rohit mentioned, we always maintain between growth and profit, it's unblinking growth as a priority for us.
Okay, so, that is what we got from the consumer companies today. Let's discuss one more stock and then we'll take it back to our guests. Shares of Samhi Hotels climbed over 11% today after Singapore's GIC picked up 35% stake in the company's subsidiaries for about 750 crore rupees. The management told us that the deal will significantly trim debt for the company and will also free up some cash for growth. Take a look.
So I don't think I like to belittle the whole transaction by just only focusing on leverage. Clearly, that's a great end result. But what this gives us is a strong partner for future growth, especially in the upscale and higher category of hotels. As you've mentioned, we have picked up 3 of our existing hotels where GIC has picked up 35% stake against a total investment of 752 crores. This does multiple things. It reduces our debt significantly, on closing. That frees up a lot of our free cash for future growth. And in addition, GIC and Samhi are committed to growing this whole partnership to about $300 million. So we do expect both partners to put more capital for future growth in this business. Closing, the net debt will come down to about 1,460 crores. Interestingly, that absolute number helps us achieve a target of near-term going below 3.5, within a year going below 3 times, and fairly quickly getting to our stable target of 2.5 times net debt to EBITDA. Therefore, we can look at deploying a lot of our free cash towards growth, but we believe our net debt will remain in the zip code of 1,000 crores to 1,400 crores over the next 2 years.
Okay, so that was Samhi Hotels, also in focus today in the news. Ambareesh, let's take this step by step. I mean, all these companies that we discussed, there's FMCG on one side and there's Samhi on the other. They represent different sides of consumption, right? So let's talk FMCG first. What did you make of the numbers? Would you buy any of these FMCG stocks hoping for a turnaround anytime soon?
If you look at the numbers, they are more or less in line with what the market was expecting. I don't think the expectations were huge this time. Like it was quite tepid. And it was meeting expectations. But then, what broke some of the stocks was the management commentary. But it makes sense for the management to be quite cautious at this point of time, looking at the market environment, limit the expectations of the market, and then possibly have a chance to perform better. Clearly what the Dabur management did in the first week of April, see as to where the price was at that point of time and how it has improved as of now. So going ahead, FMCG overall or consumption overall, I would be quite positive on looking at more cash in hands for the consumers. Then normal to better than average monsoons, which I think should improve the rural demand going ahead. And I think the 8th pay commission by the end of this calendar year, early next year, I think that should be the next trigger for the consumption stocks. So in a market like this, where we are seeing some correction in FMCG because of the management commentary, I think should be utilized to buy.
And very quickly on Samhi, let's also pull a one-year chart of Samhi because this GIC deal, clearly the market was very excited about it. The stock has had a dream run in April. It's moved up substantially. Actually, if I just look at the levels, from 144 at the start of April to 192 today. That's the sharp surge I'm talking about. ahead of the GIC deal. So very quickly, Ambareesh, on this, I mean, hotels, we know the broad theme. We know the discretionary spends going up. The question is picking the right stock. So say versus a Lemon Tree or an Indian Hotels, would Samhi look interesting?
No, see, Samhi was interesting a while earlier. I mean, I would say at levels closer to about 135, 140, but not at the current levels, especially after this sort of a move. So I would still prefer to possibly look at something like ITC Hotels, which is still consolidating at levels of closer to 200. And at the same time, like Lemon Tree, which has anyway moved up a bit, but not as much. I think there's still a decent upside, possibly either 30, 40 rupees from where we are.
Okay. All right. Got it. Let's talk about some other stocks and stories in focus. Trouble continues to mount for Ola Electric. Sources are telling CNBC TV 18 that the company will face more government scrutiny over non-compliance with the motor vehicle rules. Parikshit is joining in with the latest. Parikshit, the troubles just don't seem to be ending for Ola.
Well, the Ola Electric company has been facing probes at the Ministry of Road Transport and Highways and the Ministry of Heavy Industries, apart from different state-level probes. Now, the Ministry of Road Transport and Highways is set to issue a fourth letter to Ola Electric because they are not satisfied with the 3 earlier questionnaires, notices, letters sent to them for discrepancies in their sales and vehicle registration data and unanswered questions as to why they had stores functioning across the country without valid trade certificates, which is a contravention of the Motor Vehicles Act. Now, what the government is going to do, they are going to give a chart to Ola Electric where they would say, tell us the number of stores that you have all across the country. Then you tell us the number of stores where you have valid trade certificates. Please fill in the blank, and the number of stores which are functioning but do not have valid trade certificates, number of stores which are closed, how many vehicles have been delivered or are stationed through each of these different Ola stores across the country. They're also going to be asked about the sales data, discrepancies in the vehicle registration data, which is on the Vahan portal, what they are quoting publicly as well. Why are, for example, pre-bookings being accounted in sales numbers? Why were bookings for vehicles which had not been launched in the month of February, which had not been commercially rolled out in the month of February, also included in the sales data that they had given publicly? Also, at the level of Ministry of Heavy Industries, we're told that 4 vehicle testing agencies around the country have been asked to look into discrepancies around Ola Electric. So clearly the heat growing on the company, and the government not very satisfied with the replies that have come out so far.
Okay. All right, got it, Parikshit. Thank you very much for that latest update. Let's now talk about Divi's Laboratories. Stock was up about 5%. Now, we had a note from Citi today. The brokerage is maintaining a buy rating on the stock. It's quite optimistic on the GLP-1 opportunity with respect to Divi's. Let's get more details in. Vinny, explain what is the rationale that Citi is taking here?
So absolutely, the buy rating target price has been increased 7,050 rupees for versus 6,850 rupees. Now the rationale behind this is that Eli Lilly, had recently spoken about the GLP-1 oral drug opportunity, and obviously the efficacies that they've received in the trials that are going so far are quite positive. So now what Citi believes that Divi's is well placed to capture this GLP-1 opportunity that will turn up sometime soon. They believe this Divi's already has a lot of capacity that is lying with them for GLP-1. Plus, they have planned a lot of capex on that front as well. 18 million tons more addition plus peptide GLP-1 is what they'll be focusing on. So capacity addition plus already lying capex will give it an edge over other competition players and other players in the industry. And that is why Divi's could benefit from this. It could be an opportunity of around 800 million plus in terms of GLP-1 for Divi's Laboratories by 2030, and Divi's remains a top pick for Citi, and that's why a positive move in the stock today.
All right, got it. Thanks very much, Vinny, for the details over there. Very quickly, Ruchit, let me come back to you. We discussed several stocks there in terms of fundamental news flow, Divi's. We also discussed Samhi Hotels where the deal happened. Anything, I mean, purely from a trading perspective, do you see any prospects, any possibilities here in any of them?
I think within this basket, Divi's is looking quite positive, because if you look at last 7-8 months, the stock has consolidated within the range, has shown more of a time-wise correction. And within the pharma basket in this last 7 months, it has been a relative outperformer. So I think Divis could see a significant run up from current levels towards 6,800, 67 kind of range. So this one looks quite interesting. And apart from Divis, I think not one from the discussed list, but cement, as I said at the start of the show, is one space where from a near-term perspective, we could see decent up move. So Ultratech Cement, one of the heavyweight within the cement space, is also on the verge of a breakout of last 10 months of consolidation. So I think both these names have similar structure where last 8-9 months we have seen some time-wise correction and now are showing some breakout from this consolidation.
Okay, all right. Interesting thought there. So cement also perhaps looking good on the charts. Gentlemen, thank you very much for joining in. You have a good evening and we look forward to connecting again soon. Let's move on. Another stock that was on the radar today was Persistent Systems. The company reported a good set of numbers for the fourth quarter. Persistent CEO Sandeep Kalra has said that the company is entering the year with a strong EBIT margin outlook. Take a look.
So if you look at the margin performance, we have been saying we have invested ahead of the curve in sales and marketing. So if you look at our sales and marketing headcount, even over the last 4 quarters, it's in a very narrow band. While we have delivered in excess of $225 million or thereabouts in incremental revenue over the year. So that gives us a SG&A leverage. If you look at our utilization, we started the year with 81-82% utilization. We ended the year with 88% utilization. So there's a significant amount of utilization. And that utilization, please keep in mind, there are not too many companies that are growing. A lot of companies are degrowing. They are in fact reducing headcount, whereas we are one of the few companies that are growing, adding headcount. Even in this quarter, if you look at it, we added more than 600 plus team members globally. So if you look at whether it is the revenue growth that gives you a leverage overall over many different costs, sales and marketing leverage, whether you look at the forex side of it, whether you look at utilization, every part of our business is kind of kicking in high gear.
Okay, let's move on now. Bharti Airtel has written to the government about its spectrum dues worth about 74,000 crore rupees. CNBC Awaaz is reporting that Airtel has asked the government to convert its spectrum dues into equity. The government has earlier converted spectrum dues into equity for Vodafone Idea. The centre's shareholding in Vodafone Idea has increased to 49% after this conversion. And now Airtel seems to be seeking a similar treatment. Today, Airtel was down almost 2% in trade. With that, let's take a quick break, come back on the other side, and we'll tell you about the key events to watch tomorrow. Welcome back. Let's now talk about some of the key events to watch and trade tomorrow, which would also include several important earnings. Abhishek is here with the list.
Well, to begin with, watch out for RBI. They'll give out the data tomorrow with respect to the banking sector's deposit as well as advances movement. Last time around, deposit growth was 10.25%, while the advances growth was north of 11%. Also, watch out for the forex reserve data that RBI will come out with. Last time, it was around $677.8 billion. We also have one stock going ex-dividend, which is Muthoot Finance. Interim dividend of ₹25 will be adjusted to the stock price tomorrow. Earnings season, so watch out for key results tomorrow. RIL, that is Reliance Industries, Maruti, Cholamandalam, as well as Shriram Finance. Over the weekend, we have numbers coming in from IDFC First Bank, SBFC, as well as MRPL. Back to you.
Okay. All right, Abhishek, thanks very much for that. With that, it's a wrap on this edition of Markets Forward. Many thanks for watching. We'll come back with more news and updates in just a bit.